Welcome back, everyone. Welcome to Forex Mechanics. Now, in this video, I am discussing why we should not be looking at a trade constantly. Now, from my personal experience, just by not looking at your trades every now and then, I think that itself is a very good addition to your strategy, irrespective of whatever strategy you're using. Now, today is the 26th of May, and what I've decided is that I will be making some quick videos to show you, how I take my live trades. Now, today is the 26th of May. Here in my country, it is 7 in the morning. So currently, I'm in the Tokyo session. Now, when I look at the currency meter, it shows me that Euro and CHF, like Euro is strong on the daily and the weekly. The reason why it's strong on both the time frame, you can see here daily, this is weekly. On monthly, you have a different reading, but weekly and daily is same. The readings are same because it is a Monday. Okay, so that's why the readings are same. But even if I have to just look at this and I can see that the currencies are strong on two time frames, daily and weekly, then that should be proof enough for me to that, this is the currency pair that I would like to trade. So what I do is when I go into the Euro CHF chart at just by looking at the chart, I can see that there is no long opportunity. Why? Because forget the other indicators, just by looking at the EMAs, it is very clear that this currency pair is in a range, even though, I can see that there is some movement that has happened, and I'm on the daily chart. I can see that there is some movement happened. But if you see, even from the currency strength meter perspective, there is no real movement. The currencies are not really moving against each other, and even the RSI is flat, right? So this, just by looking at this, I know that there is no trade. Let's say if I would have seen a trend here where I would have seen both the currencies moving against each other, RSI was in a trend, or there was a very clear visible trend, and since it is just probably 2 hours since the Tokyo market is opened, and if the ATR was say around the 50 or 60% level, then I would have placed my stop loss below this daily open and I would have entered the trade. And then probably I would have just left the trade open for another 12 to 16 hours. And I would come back to my screen just around the US session to see, how much profit has been made. Now, the beauty of this strategy, or by looking at it this way, is that because you based your decision on the daily chart, you don't really have to come back and see every now and then. So for me, once I place the trade sometime in the Tokyo session, I'm directly going to come in the US session and I will see if, or I will see how that trade is progressed. So if you can see, uh, just last week on Friday, there was a trade on the dollar yen. And so I still remember somewhere here is when I had posted on the Telegram channel for a short position. The reason being, I had, I saw dollar yen were weak on the daily and the weekly time frame, and it was around 2 hours since the Tokyo session had opened. And here I saw that there was a trend going down. The EMAs were moving down, and that was enough proof for me. So what I did is I took a short position here and I put my stop loss above the daily open for that day. And towards the end of the day, I think it eventually went more than 100 pips, but around 60 or 70 pips is when I closed the trade, right? So basically, how it works for me is that just because I do not come in front of the screen for another 12 to 14 hours or almost 16 hours, that really helps me because I am not looking at my chart every now and then. Okay, so this video I basically wanted to share is only because, irrespective of whatever strategy you're using, I think if you can switch that same strategy to the daily time frame, and just by not looking at your chart for at least maybe 12 to 24 hours, that itself can really boost your trading results, and it will reduce your number of trades as well. The reason being, the moment you come in front of your screen, you will end up messing up your trade. You may think something will go against you, but if you fixed your risk percentage for maybe 1 or 2% and you've taken your position, now in my case I'm taking my position based on the readings I see here. So you can see here right now it says AUD CHF, right? And you can see here AUD is strong, CHF is weak. But in any case, I'm not going to be taking any position at the moment because there is no clear visible trend. Okay, so For me, if let's say this was the trade, if this is the currency, and if I would have seen a very clear trend to the downside or to the upside, I would have taken my position, and I would just, just forget my trade for another 12 to 14 hours, right? So you can try it with your own strategy, switch it to the daily time frame, have a fixed percentage and a stop loss. I am sure you will see different results on your trade. Thank you. I'll see you in the next video. Bye bye.